Inflation came in lower than anticipated. For a long time, analysts have been bullish about food prices jumping significantly higher on the back of drought, but that's yet to happen.
The main reason for the better than expected outcome was food prices that only increased by 0.1% month on month, whereas actually September is normally a high seasonal food price month, so we expected food prices to have risen more than that. So that's still, I think, a bit of a conundrum in the sense that food prices have remained unchanged now at 4.4% for 3 consecutive months, whereas, all around there's expectations of higher food prices due to the drought conditions and the rand exchange rate depreciation. And still, food prices remain very moderate and at quite lowish levels.
With international oil prices remaining under pressure and the rand-dollar exchange seen improving, some are hopeful this could bring some relief to the South African economy in the form of lower fuel prices going forward. But at a bigger picture level, higher inflation is still on the horizon.
We do still expect the trend in the CPI forecast curve to be upwards, but at lower levels, especially given the lower base of calculation, given the better than expected outcome today. So we're looking at levels of about 5.4% on CPI end of this year, and the peak in February that was at one stage expected to be close to 7% might only be around 6.4%.
With the latest unchanged inflation print and a bleak growth outlook, as well as talk that the US Fed Reserve could well hold off a rate hike this year, some analysts suggest that the Reserve Bank could have some breathing room to hold off raising rates. The lender of last resort is left with only November to make a call on interest rates this year. Nompumelo Siziba, SABC News, Johannesburg.